A seismic shift in global trade is coming. The United States has announced sweeping new tariffs, effective August 1, 2025. President Trump has set a firm deadline, signaling a dramatic escalation in trade policy to protect U.S. industries. The tariffs are broad: 50% on all copper imports, 35% on Canadian goods, and 30% on products from the EU and Mexico. These moves target critical sectors: automobiles, technology, and especially pharmaceuticals, with some drug imports facing tariffs up to 200%. At least 23 trading partners from Japan to Bangladesh have received formal notifications. The global scope is unprecedented, touching nearly every major economy. The EU and Mexico have called the tariffs unfair, but are open to negotiations, while the UK and Vietnam have already secured lower rates. The world is bracing for impact as these tariffs threaten to disrupt billions in trade and long-standing supply chains. Some nations are preparing countermeasures while others seek deals to soften the blow. This is not an isolated event. It's a broad offensive to reshape global commerce. The stakes are high, and the countdown to August 1st has begun. Allies and rivals alike are scrambling to respond, knowing the outcome will redefine economic relationships. The international reaction is swift, with warnings of retaliation and urgent calls for negotiation. The stage is set for a global trade showdown. The tariff announcement jolted global markets. U.S. stock futures dipped about 1% as investors braced for fallout. But by the end of the day, markets showed resilience, losses were erased, and the S&P 500 even closed slightly higher. Investors seemed to weigh the risks against hopes for negotiation. Bitcoin surged as a safe haven, while AI giants like Nvidia and TSMC held strong, reflecting faith in tech's long-term prospects. U.S. copper prices soared 13% to record highs, anticipating tighter supply from the new tariffs. Pharmaceutical stocks told a mixed story. European drug makers dipped, but U.S. pharma rose, as investors bet on domestic gains. The market's quick recovery suggests investors are betting on a diplomatic solution, not a full-blown trade war. Still, volatility lingers beneath the surface, with every sector watching for the next move. Commodities, tech, and pharma are now at the center of the storm. The world's financial pulse is racing, but for now, panic has given way to cautious optimism. The true impact will unfold as the deadline approaches. For now, markets are holding their breath. The next shock could come at any moment. As markets steadied, global institutions sounded alarms. The IMF warned that these tariffs could drag down the world economy, disrupt supply chains, and trigger retaliation. The U.S. tariff rate could soon hit levels not seen since the 1930s, raising fears of a new era of protectionism. Economists worry this could unravel decades of global integration. Central banks like the Bank of England warn that higher tariffs could push indebted companies toward default, threatening financial stability. The European Central Bank is now factoring security threats and investment restrictions into its forecasts. Trade disputes are no longer just about economics. They're tied to geopolitics and national security. The fact that central banks are modeling these risks shows how seriously they take the threat. The world's financial guardians are on high alert. The stakes for global stability have rarely been higher. Despite warnings, some investors remain calm, betting on the so-called taco trade, the belief that Trump will ultimately back down. This hope is cushioning markets, as many expect delays or exemptions before the August deadline. All eyes are on upcoming corporate earnings, which will reveal how companies are coping with tariff threats. Muted profit margins are expected, but surprises could swing markets sharply. The Federal Reserve is also in focus. Any hint of concern about tariffs could prompt rate cuts, fueling optimism. Bond auctions are another key signal. Strong demand means confidence, weak demand means anxiety. Investors are piecing together clues from earnings, Fed speeches, and bond sales to gauge the real risk. Is this calm justified, or just a pause before the storm? The next few weeks will be critical for market direction. Everyone is watching for signs of either relief or escalation. The world stands at a crossroads. Are markets right to be calm or dangerously complacent? Some see hope in recent deals with the UK and Vietnam, suggesting negotiation is possible. But the scale of these tariffs is historic, and warnings from the IMF and central banks are serious. If the August 1st deadline holds, global supply chains and profits could take a major hit. The market's calm could vanish overnight if talks fail. The coming weeks, earnings reports, Fed signals, will reveal if optimism is warranted. Is this the calm before a tariff storm? The answer will shape the global economy for years to come.